Good morning, students. We are on chapter number 6 of account part 2, that is cash flow statement. And in that chapter, we are on classification of cash flow activities, where we have already completed the operating activities and investing activities. Today, here we will talk about the third activity, that is financing activity. So topic for today is financing activity. Financing activities arise from the transactions of equity and liabilities, except those of current liabilities side of balance sheet. Financing activities are such activities due to which size or the composition of owner's capital, including preference share capital and borrowed capital of business, get changed. So friends, simply the financing activities are such activities due to which the size of borrowed capital or owner's capital gets changed. Financing activities have relation with the increase or decrease of equity share capital, preference share capital, debentures, loan, etc. It means that the increase in long term owner's capital and borrowed capital shows cash inflow, and there's a reduction shows outflow of financing activities. So simply increase or decrease in share capital or preference capital or debentures or loan is a cash inflow, and decrease in capital, preference share capital, debentures or loan is outflow of financing activity. So this is a chart for that cash inflow or cash outflow of financing activity. Let us talk about cash inflow: issue of equity shares, issue of preference shares, issue of debentures, procurement of loan, and creation of long term liabilities. That is what? Taking new loans. What else? Increase in bank overdraft. If there is an increase in bank overdraft, it is also a financing activity and it is a activity of cash inflow. Let us talk about the activities of cash outflow. What it could be: buyback of shares, that is equity shares, redemption of preference share, redemption of debentures, redemption of loan or any other long term liabilities. That means, friend, all these five means payment to shareholders or debenture holders or to the loan providers. What else? Dividend payment on equity share capital and preference share capital. Friends, equity share capital and preference share capital are the sources of cash inflow for financing activity. So any payment is done for that, that is dividend or any interest, will be considered as the activity of cash outflow of financing activities. Reduction in bank overdraft is a financing activity. Interest paid, as I said, it is also a financing activity. Which interest it is? This is the interest on debentures or any loan which is borrowed. Okay, let us take few transactions and see whether they are in financing activities or not. Say for example, redemption of preference share. So yes, it is a financing activity, as it is a financing activity of cash outflow. It reduces capital. Issue of debentures, it is a financing activity of cash inflow. It increases liability. Payment of dividend, yes, it is a financing activity of cash outflow. Dividend paid is in share capital, thus it is a financing activity. Loan borrowed for 3 years from BOB, that is Bank of Baroda, it is also a financing activity of cash inflow. Because of this, liability increases. Sale of furniture, friends, it is not a financing activity. We have seen investing activity already, and investing activity of cash inflow it is. So sale of machine is not a financing activity, it is an investing activity of cash inflow. Wages paid, it is again not a financing activity, and we know that wages paid is a routine, that is routine operations item. It is operating activity of cash outflow. Commission received, again commission received is not a financing activity, it is a routine income, so it is considered as operating activity of cash inflow. Interest received on investment, again friends, it is not a financing activity. Interest received on investment is a investing activity of cash inflow. Okay, so this is few transaction. There are certain transactions which are always included in financing activity, for example dividend paid on share capital. This transaction is linked with capital, thus considered as financing activity. So friends, this was about financing activity. In next lecture we will be knowing some special activity, and we will be doing a sum where we will take many transactions and we will define whether they are operating, financing or investing activity, and whether they are of cash inflow or outflow. Thank you.